Hey everyone, a lot of you guys have been asking me how to trade gold. So today I thought I would take some time to show you guys exactly how to trade gold for consistent profits. It's not as hard as you guys would think, but you guys just have to have a clear understanding of holding and just letting the chart play out. Now today's video was sponsored by Chart Prime. They have an amazing premium setup for you guys that gives you clear buy and sell signals that makes trading a lot easier and teaches you guys where to find the trends so you guys don't have to do the work. The algorithm will do all the work for you guys. To get started here, I want you guys to open up gold on a particular chart, and I need you guys to open up a new layout. You guys do not want to have this on the same layout as your cryptocurrencies or your stocks because it's a different setup here. Hit new layout, and I want you guys to rename this layout. For me personally, I'm just going to call this gold, but if you guys want to trade gold and silver, you can just have gold and silver be on the name. Simple as that. Usually, once you guys start trading gold, you guys just happen to move over to silver. That's perfectly fine. You guys can always change the name later on if you guys want to start moving over to silver. Hit save, and up here in the top right hand corner, you're going to see gold is the new name of the template. Now, what you guys have to do next is get rid of the volume here. It'll show you volume if you're on the 30-minute chart, excuse me, but I just get rid of it here and I go back over to the weekly chart. Keeping on the weekly chart is going to be the best bet for you guys right now. So what I need you guys to do now, before we set up all the indicators and all the fancy stuff, we got to do some basic technical analysis so you guys can see what's going on. In this particular chart for gold, I want you guys to copy this as well if you can. You guys can clearly see there's a level of resistance here. This started all the way back over here in August of 2020. It's a pretty big level of resistance. And as far as a level of support, you guys can also see a level of support here. And you can see that gold has been trading in this range for a while. We're not breaking out on any big level. We're not breaking down on any major level. We're pretty much trading within this range. The last time we deviated from a range was back when we broke down below this support level right here on the top end of this rectangle. Right, broke down, found some new support from some of the COVID volatility, and then we bounced off of that. And this was mostly due because of some inflationary things that were going on in the country at the time. Afterwards, I need you guys to add on a few more things. Let me actually zoom in right here. So this part that I'm looking at is between December 21st of 2015 and about December 16th of 2019. I'm going to add on a Fibonacci-based trend extension, okay? A trend-based Fib extension is what TradingView calls it. And I want you guys to turn the magnet on and get this low point right here. Find this high point and then drag it back down here, all right? And you're gonna see it pop up like this. This is the base default look of the trend-based Fibonacci extension here on TradingView. So we're gonna have to click on it here and make a few settings. I want you guys to extend the lines, and you can see how it booms up right there. And then what I want you guys to do is you guys can make the background disappear or you guys can make it full. I just don't like to see anything in the background personally, so I usually don't have a background at all. And then as far as everything else, you can keep it as okay. And then what you guys are going to see right now is you guys are going to see few different lines here. And if you guys want to, sorry, I forgot one thing here. You guys can always make these lines a little bit thicker. For now, I'll do that just so you guys can see it a little bit brighter on the computer screen. But you guys can see clearly right here, we have a level of resistance on this Fibonacci base extension, and we have another one right here, okay? That kind of matches this zone that we're looking at this point in time. If you guys don't like to see the clutter, I'd also recommend clicking back on this, going over here to settings, and getting rid of all the lines that you guys don't see. In this example, you can see there's a blue line and a red line. So basically, we're getting rid of everything else that's not red or blue. That way you guys can have these lines on your screen. If you guys even feel like that's not even worth having on your charts, even though I like to do it, this is just for educational purposes, you guys can get rid of this because you guys can clearly see those zones. For now, we're going to keep those lines on there because those are pretty hard levels, and there is some interesting stuff that usually happen. After this, we're going to be adding on the formal indicators. For now, we're going to start off with EMAs, so that's moving average exponential. I want you guys to click on this 3 times, 1, 2, 3, and then you guys are going to make this 20, 50, and 200. So there's 20 here. Let's make this into a green with a thick line. The second one is going to be 50, thick line, and right here 50. And then finally we're going to have it be 200, yellow, and thick as possible. All right, and there's the base setup right there. Now we're going to need to add on a MACD and a few other things. So let's go over here, MACD, moving average convergence divergence. Click on this once, make the lines thicker as always. And for the inputs, we're going to be using this particular chart because we're going to have two on this layout. This one's going to be set to 12/26/9. The default settings, you guys don't have to change a thing as far as the numbers on this one. Afterwards, I want you guys to type in stochastic, and you guys are going to add the stochastic RSI onto your charts. And again, you guys are going to make sure, go over here to style and make sure these lines are as thick as possible. I want you guys to be able to see them, even if you guys are using different monitors and things like that, especially if you guys are zoomed out sometimes so you guys can have more things in your layout. For inputs, you guys are going to keep the majority of this the same, but for the K level, you guys are going to turn this to 10. Next, the D is going to be 3, RSI 14, stochastic length 14. For these two bottom ones, I keep them at 14, but some of you guys may want to play around with 14, 21, and 28. See if you guys like those, and if you like them more than this base setup as far as 14, 14, keep them the way you like them. Just make sure they're making you profits and the back testing is handled. Here's the basic way you guys are going to be using this. And it's not as complicated as you guys would think. It's more of just being able to hold. And this is for those of you guys like to trade for and hold for weeks or if not months. For those of you guys like to day trade, we're going to be looking at that right after this. So you guys are basically looking for your typical crossovers from the MACD. But as far as the stochastic RSI, you're really looking for divergences. And if you have divergences happening on both the MACD and the RSI, whoa, you are looking at some really good profits that are like almost imminent as far as I'm concerned. So the first example I see here as we back test this is you guys can see that we have a crossover right here that happened in October of 2022. And on top of that, we had a crossover that happened right over here as far as the stochastic indicator. Two crossovers is very good. A crossover on the stochastic RSI alone is not something that I'm usually looking at. To be frank, I need to have it in conjunction or paired with the MACD crossover. It has to be happening around the same time. Most importantly, when it comes to stochastic, you can see where oversold levels over here, oversold, and you can see what else is happening here is you can see this divergence, lower out low, higher low, and you can see how we are having these lower lows. That divergence there is a bullish sign. So we have bullish sign number 1, bullish sign number 2, and bullish sign number 3 with that crossover. And then on top of that, here's a couple things you have on top too. You have a breakout happening here. So that, I messed this up a little bit. There you go. Breakout happening right there, it looks like. We have a breakout, and on top of that, we're at the support level down here, bouncing off support. So all those signals justify a strong buy position. Now, what happened after you bought though? You had to wait for a dip and then the rip. A lot of times coming out of this, people will buy the breakout, sell off, and during that sell-off period is usually where you guys might find your best buying opportunity if you want to get the best value for the currency, which in this case is gold. I, however, do not manage my gold trades day to day. I usually make the trade and I wait a while and then I have my stop loss in place. In this circumstance here, what I'd recommend you guys do is you guys either buy on the end of the week when the market's actually closing for gold, or you guys can instead just have some trigger buy limits about usually a few percent below the close price, because usually we do dip down. I like to buy just in case we don't, because usually I'm going to be holding this for weeks and weeks. So I'm okay if we have a dip before the eventual rip. And if for whatever reason it came back down due to some macro effects like Russia invading Ukraine, something like that, I'd be more than happy to take that loss, because usually it actually makes you some really good profit. You're going to win about 80 to 90% on this strategy, and it's a very good one. But you can see it doesn't happen too often where you have all these signals. Usually you're buying down here, selling at the resistance levels, over here, shorting over here, and scaling out at some of these levels. You're not going to always have this opportunity, so when it comes, you guys have to take it. That's the weak point. You can't trade this every day. You're usually making one big trade, holding for weeks and so forth. Now, let's back test this a little bit more. You can also see two crossovers occurring back over here. Crossover number 1, crossover number 2, and you can see how there was a crossover right here. Nothing happened. Again, I don't trust the stochastic RSI alone. However, you can see one more time the crossover there led to a larger move. Now, you guys could have actually looked at this as a form of resistance, but this was the first time we had gotten up here, and it was maybe more of a weaker level of resistance, so people might expect it for a larger move. You can see actually how we did have a really large breakout there before we ended up getting rejected. But you can see it working right there for a larger swing down. And you guys could also use, if you wanted to, perhaps this breakdown happening here, a justification of a longer term trend breakdown because we're no longer in this uptrend. Now we're looking to go more downward in the future. For me though, I would say that the MACD and the stochastic RSI are more than enough. And you can also see this is happening while we're in overbought territory. Now, let's go back and forth a little bit more. You can see as we were going more sideways here, there wasn't really many good signals here. And this just happens. You don't have to force yourself. And why was there not many signals? We weren't really close to the level of resistance up here, and we weren't close to the bottom. So we really weren't dealing with these trends too often. The only time we dealt with it was right here, but there was no buy signal here, no buy signal here. I personally would not have taken that. I might have taken something more of the effect of, hey, you can see there's a breakout right there. Or maybe I've been looking for a breakdown if it was the other way around. But we consolidated, we had our breakout, momentum was going up. We had a crossover right here, which is a little bit later. And again, I don't trust these crossovers alone, but you can see how that breakout popped you up a little bit higher here. That's the way I typically be using this. And then when you guys understand how these crossovers work, like you can see the crossover that happened way over here led to a downward trend after we already made our high, but there was no previous level of resistance to test it out. Once you guys understand how these actually work out, then you guys are able to adjust it for a 4-hour chart. So what I'm going to do now here is I'm actually going to get rid of all these lines, everything that we've done so far, because it's a little bit cluttered, but you guys can imagine all that stuff there. Afterwards, what I want you guys to do is go up here to the right-hand side. You're going to see select layout. I want you guys to make this into a twofer. So you're going to have one layout here and one layout here. And everything that you just did over here is going to be copied right over. The MACD is a little bit clustered because I was moving it around. But what you're going to do now is actually just get rid of the stochastic RSI because you don't need it for this particular layout. This one right here for you day traders is going to be for the 4-hour charts. And here's the way I'd recommend using this one. Again, you would in theory want to have all the same technical analysis as before, but there was so much clutter in drawings that I didn't want to deal with that. So let's just hurry this up and add some levels of resistance here. It's a very quick thing to do. Resistance there, support there, and let's not add those Fibonacci extension levels because I don't think we need them right now. Now, when we go over here to the 4-hour chart, what you're going to be using a little bit more now are the moving averages. On the weekly charts, the moving averages are usually more of support and resistance levels, whereas on the 4-hour chart, you can use them more as death crosses and golden crosses that can really move the chart forward for you. Here's what I'm looking for now. You can clearly see on this 4-hour chart, we're about to have a crossover and start breaking back down. You can see the momentum shifting at this point in time. Just like here, the momentum shifted and boom, look at us go. Momentum shifted here and boom, look at us go. This is not about getting to the high points here. This is about trading the trend for you day traders out there. And it works pretty darn well because gold doesn't move like the stock market, which is like as volatile and as crazy. We normally like to have these trends because day traders and the more risky players out there aren't normally playing with gold, so to speak. When you compare that with the MACD here, which is, I should just open this up a little bit more. You can see some of these crossovers happening. And again, you're looking for the divergence. So let's put on a little bit of a marker here. You can see the crossover right there led to a downward move. Crossover here led to a downward move. Easy, easy. All right. Now you also see lower highs, higher lows. That divergence will break down here, which you guys can look at the breakdown occurring there. Oh, at the same time as the MACD crossover, that is a breakdown that you guys could play and make some profit after. But again, it's not like it just comes screaming back down like a Bitcoin or an Apple or a Tesla. This takes time and it is a bumpier road, but that bumpy road, the trend always wins out. And that's why I'm telling you guys to be prepared to just hold on to that position, have a stop loss, but in this case, that stop loss would probably be the beginning of this candle over here around 2022 or all the way up here around 20,047. So if you're looking at this and you're trying to take your position somewhere over here, that stop loss is around 2%, or at the lower end right here, about 1% or so. And to be frank, you're not really looking for this small amount of profit. You're looking for maybe the profit that brings you right back down here, which in that case, again, this is without leverage, but bear with me, 2.5% to 3.5%, that's something more of a realistic profit. But because you guys understand what's going on, you're most likely going to be doing a lot of these smaller day trades within this longer trend. So you guys might actually have a longer trend here, a longer short position where you're holding for weeks and weeks. But while you're doing that, you're just doing a whole bunch of day trades because you know this overall trend is much more likely to be going in your favor if you're shorting than if you're going long in the situation. So this is the pattern of what I normally like to do. When you get into resistance zones, the divergences are going to be key for you making some great profits. But I need you guys to understand this is also a great opportunity for you guys to short heavily for long-term moves. The only caveat to this being is when you guys are stuck in long-term moves, you guys have to understand what's going on around the world and what actually makes gold go up in the long term. Gold is people are freaking out about the dollar. They want to put their money into a safe retirement option or somewhere safe. Usually gold is that safe option for a lot of people out there. If people are more fearful like they are right now, gold is definitely going to be in higher value. So just keep that in mind as you guys approach trades like this. Just have a clear understanding of what's going on in the world, whether it's like a war, a financial crisis, right? Even in the 2008 financial crisis, gold went down before it spiked up. It did go down, so just understand that, okay? There are different ways to go about this. If you're looking at the bottom zone here, you can see these smaller crossovers on the 4-hour chart, crossover there, crossover here, crossover might even happen over there, crossover here, and you can see how those big moves worked out for you. Now, it's important that when we do look at this one more time here, you understand that we're in the middle of this trend. This one is a little bit harder of a bet to place. But if you're in here and you see those same crossovers happening, you're much more likely to take those chances. So you're going to be making a lot stronger bets here on these levels and these levels. But maybe here you're going to be trading with half the amount of money as you would be trading here. So it's basically 1/2. All right. So you guys don't need to be going as strong here because the overall trend is still down. And even though we didn't run up exactly into resistance levels, usually that trend likes to continue on. But as we go back over here, you can see something else happening. What do you see? The divergence occurring, right? Divergence occurring. So that divergence could have been an extra big boost to you. And that's why you would probably take that trade, but maybe not take as much money on it. And you can actually see here as we're looking at it, you can see how we had this kind of crazy dip right there. That usually happens when you're not trading in this full mid zone, when you're trading in the mid zone, I would say, okay? So I hope you guys enjoyed this strategy. Don't make it more complicated than you have to. Gold likes to trade in this range right now. When we break down out of this range, it's going to be a breakdown. Short into that breakdown and just have a clear understanding of where those next support levels are going to be. Thanks, everybody.